Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. My name is Desmond, and in today's podcast, we're exploring a fascinating topic that has intrigued traders for decades: the Elliot Wave principle. Right, this concept has a profound impact on technical analysis, and we're going to break it down for you. So let's get started. What is the Elliot Wave principle? The Elliot Wave principle is a theory in technical analysis that was developed by Ralph Nelson Elliot in the 1930s. Elliot proposed that financial markets follow specific patterns of movement that are predictable and repeatable over time. His theory suggests that market prices move in waves, which can be identified and analyzed to forecast future price movements. Foundation of the Elliot Wave principle. At the core of the Elliot Wave principle is the idea that market prices move in repetitive cycles driven by investor sentiment. Elliot identified that these cycles consist of two main phases: impulsive waves and corrective waves. Impulsive waves, these are the waves that move in the direction of the overall trend. They are typically composed of 5 waves: 3 advancing waves, 1, 3, and 5, and 2 corrective waves, 2 and 4. Corrective waves. These waves move against the prevailing trend and are typically composed of 3 waves: an ABC pattern, where A and C are moving in the direction of the correction, and B is a counter-trend move. Key wave rules and guidelines. To effectively apply the Elliot Wave principle, traders follow a set of guidelines and rules. Wave patterns. Each wave has its own characteristics, and understanding these can help in identifying where you are within a wave cycle. For instance, wave 3 is often the longest and most powerful in an impulsive sequence. Wave relationships. The lengths and time durations of waves have specific relationships. For example, wave 2 cannot retrace more than 100% of wave 1, and wave 4 often overlaps with the price territory of wave 1 in many markets. Fractal nature, Elliot. Waves are fractal, meaning the patterns repeat themselves on different timescales. So, a 5-wave pattern on a daily chart can also appear on an hourly chart. Limitations of the Elliot Wave principle. While the Elliot Wave principle can be a powerful tool, it is not without its limitations. Subjectivity. Identifying wave patterns can be subjective and open to interpretation. Different traders might have different views on where the waves start and end, which can lead to varying predictions. Complexity. The theory requires a deep understanding and practice to apply effectively. Its complexity can make it difficult for novice traders to use consistently. Market conditions. In highly volatile or choppy markets, the clear wave patterns that Elliot proposed might become less distinct, making accurate analysis more challenging. And there you have it, an introduction to the Elliot Wave principle. Understanding this concept can provide valuable insights into market movements, but remember, like all tools, is most effective when used in conjunction with other forms of analysis. Thanks for tuning in, and in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.